Are high interest rates and high costs stopping you from your real estate goals this year? Well, I'm here to give you 5 ways to lower your interest rate in 2025. I'm Veronica Morss, and if you haven't heard yet, interest rates are, predicted to stay in that 6.5% from mid to end of year. Now that was predicted in the beginning of the year, and we're in May. We've seen them go down a little bit. We've seen them come back up. We're at the 7%, high 6s. So what are some ways at least just help bring that down so that we can have more of a stable time and get you into the home that you want? Well, number 1 is going to be to shop. Not for homes, but for rates. Now, this might sound obvious to some, but maybe some to others. But a lot of different lenders offer different rates, different in-house options. So if you are just going to one lender, I would definitely go shop around to 3 or 4, just like you would for a lot of different ways to get quotes. You're going to be amazed that even a tiny bit of a percentage is going to save you hundreds or thousands, over either the month or the term of the loan. Number 2 is going to be check your credit score. If you have not done a fix on this, or maybe you're preparing to purchase a home, I would definitely take a look at that. There's free reports all out there. If you are a little bit on the lower end right now, try to get that up as high as you can, because banks find less risk for someone that has a higher credit score. So they will often offer a more favorable interest rate if your credit score is looking good. So if you need help preparing for that, and hey, how do I manipulate to get my credit score up in the next few months, reach out to me and we can definitely have some conversations. And number 3 to get a lower interest rate is going to be bringing more cash in. Now, I know, easier said than done. However, there's a lot of creative ways to do this. One is going to be, you can actually do stock lending. If you have a stock portfolio, you can actually borrow a good percentage amount from it, and it's at a pretty prime interest rate, plus minus a little bit. So it's a great option. I don't think people know it. So you can bring that money in. You can keep that same money in the stock, so that portfolio keeps growing. You borrow against it, and then you can bring more money into a home, have a lower down payment, or higher down payment with lower interest rate, and then slowly pay off the stock loan. Now, the other option is if you have that wealthy family member. I know not everyone does, but you can prepare a contract for them. Say, hey, I would like $50,000, $20,000, and if you're able to do it, talk about 1 to 2 year loans with a very small interest rate. Maybe they'd be happy to help, and they're still getting something from it as well. So that's number 3. Number 4 is going to be buy points. Now, lenders will offer rate buy downs, but better yet, I say have the seller pay for rate buy downs if you can. But essentially, what this means is that you can pay your lender, bank, X amount of dollars to get either a permanent buy down rate. So let's say the rates are 7, and then they say, hey, it costs $20,000 to get your rate to 6.5. Trust me, that 0.5% difference is going to make a huge difference in your monthly payment. And we're seeing a lot of seller credits for this. So a buyer asks the seller to pay for a rate buy down. Or if that's not an option, you can look into that, and you have to calculate, hey, does this cost of this make sense for how long I'm going to be living here with that difference in interest rate and payments per month? So do your math. If you need help with that, of course, we have the tools and we have the people to help you with that. Now, number 5, last but not least, is look at different loan options. I think a lot of people out there think that, hey, the 30-year fix is the only option out there. If you can afford a 15-year, that's going to lower your interest rate pretty drastically. But also, I know ARMs, the adjustable rate mortgages, sound scary, but they've changed a lot. So we see a lot of 10-year ARMs, 7-year ARMs, and then essentially they're fixed ARMs. So they're fixed for that 7 to 10 years, and then you hope that within that 7 to 10 years you can refinance. But we see a lot of favorable interest rates. So just look at different loan options, see what works for you. And if you are looking to buy or sell a home in 2025 in the greater Seattle area, and you would like to strategize with it, please reach out, and we're happy to help this year. We can't wait.